AMD is easily one of the most questionable stock in this bull market. I even put it in my stonk collection, Foolish Five, namely AMD, Tesla, Enphase, Micron, and Intel, because they don't exactly behave or respond to their fundamentals. Enphase just recently fell into new lows, despite having a massive year-over-year revenue decline, 54% year over year. I'm not gonna dive deeper into that hellhole. Tesla is in another realm of cult investing I will never understand. I'm bullish Musk, I'm bearish Tesla. But that can't work, I was told, in a restrictive financial conditions. Intel is Intel. Micron is somewhat the same with AMD, but I'm gonna do that in a separate video. AMD at 137 is trading as if they're printing 30% net income or free cash flow margin. But on print, they only do one fifth of that, 6%, 7%, single digit margins. Do you know what prints like that? Not tech, I can tell you that. 6 7% is a well ran retail store. A Levi's, PVH, Ralph Lauren, maybe even a Target. And it's been like this since 2021. It's been like this for 3 years going forward. But estimates are still like this. They're still expecting 21 to 26% margins, not even 30s, like where it's trading now. Mind you, there are 46 analysts on this. Also, they've come down a bit, these estimates. I don't know, maybe shame has hit on their works. But last I remember, estimates were as high as 33%. Yes, I've been on this for a while and I've been shit posting AMD for the longest time on X tweet. Tweets are now deleted. Sorry. I continue to ridicule this by exposing this crooked work of stock shilling. I'm not saying AMD can't and won't ever get those margins of 20s and 30s. But like for 3 years now, they've been printing like this, what is clearly subpar estimates. And subpar is even downplaying it. The stock actually held better and returned 280% from trough to peak, if you caught that rip here. The stock market has its favorites, like the universe has its favorites. Oh god, these chickens. I live in a village, by the way. I can tell you, I can name you stocks that are doing extraordinarily well, that are in a downtrend. It's just not fair. Say AMD prints and beats and meets these estimates for the first time in many quarters. What happens to the stock that's already priced in way more than these expectations? Do you know why I used EMT for AMD? I didn't want to use their prints even because maybe it's skewed or, financial engineering gone wrong. I wanted to know where AMD is trading at just by looking at shares, outstanding, and trailing 12 months prints. At the current price, it's trading 121.4 times PE, 144.4 times free cash flow, and 3.9 book. We value tech for their profits, future profits. Because then, if we value them on books, then Apple shouldn't be a $3 trillion company. Actually, Tesla is trading around 34 EMT. So, really, AMD is not that far from an Elon fueled cult stock. I know valuation is a hellhole in itself, but really, genuinely and curiously asks, what's so different between AMD and GME? I find AMD very hard to value. Estimates are clearly a whack job, guesswork, and prints aren't exactly convincing and coherent as well. In the real world, small businesses, this is normal. But if you're a multi billion dollar business, this just raises flags. What do you actually do? Because if SMCI financials has red flags all over it, what even is this? How does money flow in the business? It's like an ADR financials. I don't understand it. Single digit margin is very evident here. For it to trade like tech, like it's doing now, is an anomaly. I don't understand it. I think this should trade like an HPQ or a Dell. It's easily a wealth transfer. If you're a long term investor here, I hope you sold already because I don't see anything material here. Pure stories and speculations. Is it harsh to put 6 to 10 times multiple here? I think that's still rich because I know I won't ever pay 20 times or 30 times for these prints. Maybe it's just another enigma I will never understand.